Tesla's meh quarter is the topic of today's presentation. You may have seen Tesla's stock trading down 10% following their quarterly earnings release, and that's because of a number of factors we're going to go over today. Now, don't expect the media to tell you what's going on because it's now strictly political. It reminds me of back in the day when there's a decent newsletter out there called Strictly VC, and this was in the Pound Me Too era, and I had replied to one of her newsletters and said, can we please have more content on sexual harassment? Of course, being completely sarcastic. And in her next newsletter, she said, this one's for you, Piv, and then proceeded to unload on more sexual harassment information for venture capital investors, I suppose. So that taught me that the tech media these days is all about picking a political side and then ramming it down people's throats. And Elon Musk has unfortunately stepped into that pile of shit. So here you can see some of the headlines. Elon Musk says Tesla faces enormous hurdles with Cybertruck production. Well, they face enormous hurdles in pretty much everything they do, but that's true. So we're going to touch on that. And then you can see here some quality content from The Verge. Elon Musk rants about work from home, folks, and that's actually worth a read. It's quite good, the way that he describes the people who are wanting to work from home, yet think nothing about all the electricians and plumbers and construction workers and people who don't have that luxury, who are out there doing their bidding. So this piece here by the New York Times perhaps is the most notable. Tesla's quarterly profits plunge 44%. Well, we're going to talk about that too. So no matter how you think about Mr. Musk, he's probably the greatest entrepreneur ever, though we've always viewed him as a powder keg of risk. Now, love him or hate him, you should be able to acknowledge his extreme competency as well as his failings alongside of that. Whatever you say about Mr. Musk, we can probably all agree that he doesn't dice words, so we should listen to what he has to say. The caveat there being he's a company CEO and his job is to cheerlead. So when you look at their earnings deck, the objectives clearly stated in the first couple sentences, they want to reduce cost per vehicle. So we'll want to watch these metrics. Generate free cash flow, maximize delivery volume, invest in AI and other growth projects. So you can expect the banter in the earnings call to surround these objectives. More or less, Elon and the Tesla team want to sell more cars while maximizing the profitability of that auto venture to fund future growth stars like AI. Now, when we look at the first slide of their earnings deck, we see this company is in no danger of going bankrupt. They had operating cash flow, so that's an important metric to watch. Forget about profits. Focus on the cash that's being generated by a business. And you see here they generated $3.3 billion last quarter. But then free cash flow is only $0.8 billion. Why is that? Well, that's because they took the cash that they generated from their operations and invested it back into the business. And you see this third item here, $3 billion increase in our cash and investments to $26 billion. Again, in no danger of going bankrupt. They have plenty of liquidity. But the difference there, you say, well, if they only had free cash flow of $0.8 billion, how did they increase their cash by $3 billion? Well, that's where you need to put on your accountant hat and go start looking at cash flows from investments and financing in addition to operations. Now, look along here at the bottom. This is something to pay attention to, which is their GAAP gross margin, which is decreasing over time. Take into account that the three segments that were shown here, automotive revenues, energy generation and storage revenues, and services and other revenues, those combined, the cost of goods sold for those revenues resulted in a gross margin of around 18%. You can see how that's been on a decline over time. And when they talk about reducing cost per vehicle, we'll want to look at that metric separately. Here you can see how that metric has been decreasing quarter to quarter, and that's what you'll want to pay attention to when it comes to their objectives. Now, that first page continues. We continued to believe that an industry leader needs to be a cost leader. I recall at some point Mr. Musk saying that the biggest competitive advantage that Tesla has is their manufacturing capabilities. During a high interest rate environment, Tesla believes that focusing on investments in R&D and capital expenditures for future growth while maintaining positive free cash flow is the right approach. So think about that. If other companies are having to go out and sell equity at depressed prices or raise debt at high interest rates, that's preventing them from expanding. While Tesla has the advantage of all that liquidity, they should be expanding now because they'll be able to get ahead of their competitors. They go on to say that their humanoid robot is currently being trained for simple tasks through AI rather than hard-coded software, and its hardware is being further upgraded. So the idea being there that these robots will be able to help in building all the cool things that Tesla builds. And this last statement here, with a combined gross profit generation of over $500 million this quarter, their energy generation and storage business and services and other business have become meaningful contributors to profitability. So those other two segments aren't a drag anymore. Now, I'm going to pause this for a second and say that we need your help to support this channel. We don't run ads, so YouTube doesn't have any incentives to push our videos in front of other people. So if you like this video, just click that thumbs up, please. That will help promote our content. So please like us and support our work. Now let's talk about production real quick for Tesla. So they have 1.8 million vehicles targeted for 2023. They have a 2.23 million vehicle capacity. I love this table on the right that shows their various production lines. So they have over 80% utilization. Contrast this to some of the electric vehicle companies out there that are wannabes in trying to get their vehicles to market. And they talk about these production lines that they're building and all this capacity they have. And when you look at what they've actually produced, it's just a minuscule fraction of the supposed capability. So utilization is walking the walk. Several production lines were down this quarter for upgrades. So the utilization would be expected, or at least forecasted for 2023, that 80% is notable, but would probably be lower this quarter because they had those upgrades. Now, when you look at these numbers, because you have quarterly noise, I liked these two sets of charts in their earnings call. The one on the left shows their vehicle deliveries alongside of operating cash flows and free cash flow, and see how the numbers are sort of all over the place. But then on the right, they've smoothed those out by looking at trailing 12 months, right? So they simply take the last 4 quarters, more or less, and then every quarter you have a new data point and another one drops off, right? So it smooths it out, and you can see how their vehicle deliveries, right, are steadily moving upwards, and their operating cash flows seem to have stabilized. So they're on an upwards trend there for a while. Now they're stabilizing, and free cash flow is dropping. As he said, they're investing back in the business. Now, some other bits noted from the call. Mr. Musk says, we will continue to invest significantly in AI development. I think has the potential to make Tesla the most valuable company in the world. His statement goes on to say, if you have fully autonomous cars at scale and fully autonomous humanoid robots that are truly useful, it's not clear what the limit is, to qualify his previous statement. And that goes to ARK's thesis about whatever they said, how many thousands of dollars Tesla shares could be. All they did is take a spreadsheet and do some forward-looking analysis and try to realize. I think they said, and we did a piece on this, that they have somewhere around half the value of Tesla yet to be realized from autonomy. Mr. Musk goes on to say, as you can see, Optimus a year ago could barely walk, and now it can do yoga. He thinks a few years from now it can probably do valet. Well, that's a pretty interesting use case. You'd certainly have to be able to walk and take somebody's keys, get in a car, drive it, park it, take it back to them. So it remains to be seen how useful Optimus will be, but it's clear that Tesla believes that's the way forward, and they're investing in that. And then Mr. Musk, as he said before, I think some people understand the profundity of the Tesla AI system. Mostly it's very, very few. He keeps saying this. Few people understand how great the work they're doing in AI is. Perhaps that's the case. He refers to this work as basically baby AGI, and that for an autonomous car to drive properly, it has to understand reality. So that's an interesting statement there. On the Cybertruck, so this is what was raised in the media, he says, I do want to emphasize that there will be enormous challenges in reaching volume production with the Cybertruck and then in making a Cybertruck cash flow positive. Indeed, as we've seen in countless examples of wannabe auto manufacturers that are up and coming that never get there. He thinks it's their best product ever and that it's going to require immense work to reach volume production and be cash flow positive at a price that people can afford. And in the call, he talks a lot about the macroeconomic headwinds that we're facing, high interest rates, consumer debt, things that we talk about that are concerning for investors. He says here, that's why I say prototypes are easy, production is hard. Indeed, everybody can produce, and they do produce prototypes, splash them, the pictures of those prototypes all over their SPAC decks and raise billions of dollars. They used to be able to do that. Now they're all going bankrupt. He says it's a great product, but financially it will take, a year to 18 months before it is a significant positive cash flow contributor. Well, that's pretty darn optimistic if you ask me. Maybe that upset Wall Street, but I think that that seems quite optimistic. This slide here is interesting. It shows how the two other revenue segments, see in the upper left corner, you have automotive revenues, then you have the energy generation and storage, services and other. So the top chart here shows energy storage deployments. He says, as this business grows, the energy division is becoming our highest margin business. Wow, that's rather interesting. The bottom here, this chart shows the services and other segment, the gross profit. So showing how that's no longer a drag. And it says here, supercharging, insurance, and body shop and part sales being the core drivers of profit growth year on year for this segment. Pay-per-use supercharging remains a profitable business for the company, even as we scale capital expenditures. That's rather interesting, especially considering that you want to open up supercharging to other OEMs. Now, Wall Street analysts, in all their wisdom, current sell-side, this is a question raised in the earnings call, current sell-side consensus assumes that Tesla will deliver 2.3 million vehicles in 2024, representing 28% growth versus 2023 guidance. Is this growth rate achievable without any mass market launches in 2024? And when does Tesla expect to return to its 50% long-term compound annual growth rate? And then Mr. Musk says, the risk of stating the obvious, it's not possible to have a compound growth rate of 50% forever or you will exceed the mass of the known universe. But I'll think we will grow very rapidly, much faster than any other car company on Earth by far. So just to conclude, Mr. Musk was understandably pessimistic about the macroeconomic headwinds and talked a fair amount about those in the earnings call. Remember, he's speaking to an internal audience as much as an external audience, and the media will pick up on things that he says, such as we're going bankrupt, or he says very negative things to spur on the team internally and to keep people motivated. He says Tesla has the best real-world AI team on Earth, period, and it's getting better. Now, there may be some cheerleading in that statement, but this is really ARK's bull thesis about Tesla. And if you're a Tesla bull, then a lot of the value that you see in this firm is not as an automaker, but as a future AI powerhouse. For Cybertruck, he says you have to invent not just the car, but the way to make the car. Absolutely. And you better already be doing production at scale if you want to compete with Tesla, like BYD is able to, right? Because they're the biggest EV producer in the world by units. Tesla's meh quarter, it's just more short-term noise. So I'm going to put up another video here that you might find interesting. Before you click that, please click this Nanalyze logo on the right to support our work. We don't run ads. We need your help. Thanks so much for taking the time to watch this video today.